Hello, and thank you for joining us. This is my very pleasure to welcome Harly Zappino, the founder and partner at Neo Legal. The team specializes in blockchain technology, cryptocurrency, corporate advisory, and financial services. Harly, the list of accolades is really huge. Out of curiosity, how did you end up in blockchain and cryptocurrency?
So basically, I started in 2015. I'm a gamer. So basically, I had a graphics card, wasn't doing anything, so I started mining with my graphics card, as a lot of people have done. And from there, I basically got more and more interested with cryptocurrency because I was mining Bitcoin, then I started mining Ethereum, and I was mining Redcoin, Sia Coin, stuff like that. So basically, that was my introduction into cryptocurrency.
That's kind of interesting because most of the miners that I could think of, they became traders. But in fact, once you started mining and then you had that sort of migration towards the legal aspect of the business, do you happen to have some kind of story or inspiration or motivation? What is the sort of story in between, and how did you end up starting your own company versus working for the corporations that could pay you zillions in terms of their capacity?
Look, first of all, I'm not very good at technical analysis. I can read it, but when it comes to luck is never on my side. So I have to work hard. In relation to my journey, so basically I started, like I said, I started mining, and then I moved into actually advising on cryptocurrency projects. I started advising, and then basically my tech knowledge was also solid as well. I don't want to talk myself up, but so from there, I combined that with my legal degree. I started working in a company that did a little bit of blockchain, and then I helped build that process, but they weren't specialized in cryptocurrency and blockchain. So basically, I came out and said, look, there's no one else that is specializing in cryptocurrency and blockchain specifically in terms of a law firm. So I ended up opening up my own law firm. And basically, what we hope to do is become sort of like a PwC or a Deloitte of cryptocurrency and blockchain, where we provide a one-stop shop for everything. So
that sounds kind of interesting. In other words, if anybody wants to tokenize their industry or their company or anything what they have in mind, sort of move from traditional business practices and become part of this blockchain revolution or DeFi, you are the person they could go to, and you could build the architecture, business processes, business model, and advice on financial modeling, and probably did introductions, if I'm correct in understanding.
Yeah, so it's everything. So I build the tech architecture, we build the tokenomics, we do the tech itself, get the audits done, accounting, etc. So we have the whole package.
That's fantastic. Well, out of curiosity, within 5 to 7 years of your professional career, obviously you have worked with probably dozens, if not more, projects. What are the sort of shining examples that you could think about? So you start working with a startup, and they were this small kind of David and Goliath situation, and then you helped them out, and they made it to the world stage. Would you please share with a couple of examples?
Like there's a few we have a few good ones. So Metex is one. It's a tokenized real estate, tokenized gold. And they're really building traction, etc. I have a few other projects cooking right now, which are quite big, but they're blue. All I can say is blue label sports clubs. And then I also have a few, how do I say this without giving it away? All I can say is blue chip clients. And like in terms of startups, there have been a few along the way that have made a lot of money, and it has made me a lot of money because I've advised and whatnot. I guess some of the cool projects that I'm working on now is Red Fox Labs, which is quite large. And there's another cool one called, it's still up and coming, Bad Days. Bad Days NFTs, which is really exciting, built by Stan Lee, or the intellectual property was built by Stan Lee. So yeah, those are some of the cool things coming up.
Well, that's the good thing that you did touch based on the NFT. I'm going to come back to that point, but I want to pick your perspective because blockchain and DeFi and NFTs are completely new sort of ideas. How does the legislation work around these industries? How does the Australian government regulations work? How do the Americans work around it? Is there sort of universal legislation that can be applied?
Look, in most scenarios, a lot of the legislation in terms of security law is quite common across all jurisdictions. So there is a lot of common traits that security laws have. Obviously, each jurisdiction is somewhat specialized, but you can sort of establish a broad framework for each jurisdiction across the world. So in terms of the Australian government or law in itself, basically what you have to fit all these new products under is existing law. So a lot of the existing law actually take a lot of cryptocurrency related stuff into consideration. And basically why a lot of regulators haven't really hammered down on a lot of DeFi projects and whatnot is because they're taking advantage of loopholes. Because obviously the legislation is quite old and it doesn't take into consideration this new technology as normal, right? As anything happens. So a lot of the DeFi protocols and whatnot actually fall under existing legislation, especially in Australia.
Okay. Do you think any kind of changes would come along in the long run once these NFTs are popping all over, or they would stick to their current existing laws? And then what do you think would probably happen in terms of its legislation, not only towards the NFTs, but the DeFi and the blockchain?
Yeah, 100%. Look, I think we're going to see a lot harsher legislation surrounding on and off ramps. So basically crypto to fiat and fiat to crypto. And we'll see a lot of legislation surrounding DeFi as well. So reporting requirements, advertising to retail investors, etc. So the governments, a lot of people think that it can't be controlled at all, cryptocurrency, but the governments can actually control it with the off and on ramps. However, in a few years, right, when we might move into a completely crypto-based system. And in that scenario, that's when it becomes difficult for the government to control. But now when you have to pay your taxes and your groceries and your everyday living expenses in fiat currency, the government can control us and can control our spending habits. So for example, if they said, hey, we're banning all crypto to fiat transactions, you've wiped out 75% of crypto users, unfortunately. So that's the sort of thing I think that we're heading to.
That would be kind of interesting, definitely in the long run, to explore sort of philosophy of it and utopia that is sort of shaping, and the global community around which the NFTs are taking completely different form and shape. But going back to the NFTs, so NFT industry is a rising beacon in crypto right now.
Yeah.
Why do you think personally NFTs matter, and why did NFTs become so trendy and so famous?
Look, NFTs are an amazing tool. I think a lot of people don't actually realize, but NFTs are just a tool, right? What they do is allow us to own a digital product. Never before have we been able to, as a society, as a human society, specifically own a digital product and prove our ownership over that. So for example, you have a Word document, right? You can draft up a contract, pop it in a Word document, but then someone can just copy it. And they can copy it again and again and reshare it. Whereas an NFT, yes, you can copy the image itself. Amir, I can copy your image right now, copy and paste, but it doesn't belong to me. And I can't show that your face is owned by me. But with an NFT, if you put that in an NFT and you sell it to me, I can prove that your face belongs to me. So it's a very powerful tool, and I only see it getting bigger and bigger. And there's a lot of use cases, music, movies, whatnot.
Well, I totally see this valid proposition for celebrities, for those people that have big names out there. But how about the middle class people like myself, our team members? How can we benefit from NFTs except for being a consumer or buying this famous sort of artworks or movies or soundtracks?
Look, any business can actually implement NFTs. So any product and service can actually be tokenized as an NFT. And this is where I see very big value being generated. So for example, if I own let's say a law firm, right? One of my services might be draft a service agreement. So what I'll do is I'll tokenize that token of a service agreement, and then I'll put it on the marketplace and allow someone to buy it. Now, someone can buy it initially, and if they think there is more value to it, if they think my service drafting skills is better than, let's say, $2,000, they might sell it on the market and someone might buy it for $5,000, right? So it's price discovery of services. Like that's absolutely huge. So you see that cryptocurrency in a order book, right? You can see that the price is fluctuating in accordance to what people think it's worth. Now imagine applying that concept to services and goods. Now, retailers don't set the price anymore, the customers set the price, which I think is crazy.
It is. That's kind of interesting example that you gave. For example, you can take my snapshot or a screenshot of this conversation, and then you could go ahead and do the mint NFT, and then you can sell to somebody else. But obviously, if I'm not happy with this kind of thing, do we have any kind of intellectual property related challenges or issues? Do I have any kind of legal right according to Australian laws or any kind of laws to go ahead and sue just because you took the screenshot and decided to mint the NFT and sell it to somebody without my consent?
100%. In every country, you can basically put a cease and desist and say, look, you're using my intellectual property, you're using my copyright, please take that down. And then you can go take them to court for that. So with NFTs right now, they're on IPFS. So there is a way to take them down. The token might not be deleted, but the image attached to it can be deleted still.
But out of curiosity, excuse me for my naive questions. It's just I'm looking at my audience and I'm looking at myself. I'm not an aggressive NFT person, but let's say you take the screenshot, you decided to mint NFT, you sell to somebody,
yes,
decided to resell to hundreds of other people, and all of a sudden this image is taken down. So what happens to capital that was spent on these images, on this particular image, and so many people participating in the marketplace?
100%. So you have to go to the source. So Amir, that person that took your picture and used it without your permission, basically it's their fault, and you would sue, and everyone that bought it from them would sue that person as well. However, in this space, obviously you need to be diligent as a consumer. You need to make sure, well, it's ideal that you make sure as a consumer that whatever you buy, there's intellectual property rights attached to it. So for example, I can see Pokeballs and whatnot on OpenSea, right? That they don't have the copyright to those Pokeballs. So they're not entitled to create them. There are exemptions like parody and whatnot. So you can create a parody of an image and sell that and commercialize that. But if it's specifically your intellectual property, Amir, and I've actually taken that and put it on OpenSea, then you come and sue me. Whoever's bought it will come and sue me as well. Basically, that's how it will work.
Well, that's kind of interesting because OpenSea is one of the probably the most famous NFT marketplaces. So how about other marketplaces that may exist are doing a good job? And where it's all heading, are they going to be more and more marketplaces popping up, trying to compete in just like they did back in search engine kind of era? There was a Yahoo, Google popped up at the end, like 2000 something, but Yahoo was a leading example of the search. Are we, in your opinion, in the same kind of era where there will be more and more marketplaces, they end up suing each other, and NFTs will be sort of, artists would be sort of thinking where to go and sort of showcase their works? Or as an NFT artist, I could showcase my work at OpenSea and some other marketplaces.
100%. There's going to be more and more marketplaces coming through. It's like eBay and Amazon, right? They're marketplaces, and you see other marketplaces popping up trying to compete against each other, AliExpress and whatnot. Each one has its niche. But if you use the Yahoo and Google example, right, it came down to user interface. I don't want to talk badly about OpenSea, but right now the user interface is still very clunky in comparison to what maybe we could do in 5 years' time with technological advancements and whatnot, where the user interface is nice and smooth for a user. And then also what you have is the advance of blockchain technology itself. So for example, we have layer 2 solutions like Polygon. Now, a lot of people don't touch Polygon because it's difficult to buy Polygon, Matic ETH, as well as Matic itself. And that creates a barrier to entry. So maybe later down the track, a layer 2 solution will pop up. A new marketplace will be built around that layer 2 solution that everyone uses, that has mass adoption, like Google, right? Before it was fractured, but now the majority of people, I think, I'm comfortable to say, are using Google.
Okay. Okay, that really helps. So if I go back and look from the perspective of, let's say, average user of cryptocurrency, or average user of NFT, just a simple person who consumes content or the information or participates in trading. So if I want to create some kind of NFT, what kind of legal considerations I should think of before minting NFT and start selling?
Yep. Look, biggest thing with NFTs is intellectual property. You must have the intellectual property. If you're not sure whether you have the intellectual property rights to create that, go see a lawyer, or don't do it at all. So intellectual property is by far the biggest consideration. Other considerations is dependent on the jurisdiction you're in or the country you're in, is taxation. So NFTs, a lot of people don't realize are considered a goods or service, right? So there is, so in Australia, it's called goods and service tax. In other countries, it will be called VAT, right? So on that, when you sell that good or when you sell that NFT, you need to actually take away that 5 to 10% and put it away for the taxation office. So it's not a digital currency. You're not trading in digital currency. It won't be treated as a digital currency. It'll be treated as a digital product. So for example, say selling a game on Steam or whatnot, it's the very same concept. So those are the two biggest things that you should probably take into consideration when setting up a NFT or selling an NFT.
Okay, so on one hand, I see the value for celebrities, as I was saying earlier, or people who have achieved something and they have a massive followership. On the other hand, it gives the power back to the content creators.
Mm-hmm.
So my question is, what other current NFT projects that you believe have some kind of social impact, that have some kind of long-lasting impression rather than benefiting from growing affluence within the industry?
Yep. So I'm a big supporter of this, and it's the metaverse. So a metaverse, well, it doesn't need NFT implementation, but the way that the crypto space is implementing it, where people can own pieces of land or shops or whatnot, is basically one of the biggest things that I see coming through. And basically in the metaverse, where it's just a creation of a digital universe, basically. So the use case of a digital universe is endless. We can do everything and anything on there. So you can see casinos and whatnot are being built in Decentraland. People are chilling in Decentraland, having fun. I think the other week there was a Snoop Dogg party on Sandbox. That was pretty cool and interesting. But look, metaverse is the place to be. Look, COVID has shown that we do need a digital space. A digital space, when we're stuck at home, a lot of people want to be out and about. Some people want to stay in their home. It's just access, being able to access everything from your home. It's a huge technological advancement, in my opinion.
Well, interestingly, there are more and more NFT projects, and I remember reading about Snoop Dogg too, which was kind of really interesting case study. And you are a part, one of the leading legal associates at Marhaba DeFi, which is Sharia compliant, a DeFi project and a sort of ethical, inclusive, and very unique project. Sharia is a completely different industry, and DeFi, by definition, is entirely based, at least based my understanding on interest, based on my research of most cases that I have seen. And there is the NFT marketplace that the team is building. Your personal opinion, how does the NFT, Sharia compliance, and DeFi, and how does that work in the context of legalities? Because Marhaba DeFi is incorporated in Australia.
Mhm. So basically, the first thing I'll start with the NFT marketplace. So a lot of NFTs right now that are coming out are actually not Sharia compliant. You cannot participate in them. The reason being is because they use generative art. So basically, just a quick explain on generative art is when you have different traits and they, when you mint, they come out at random, so you don't know. I'm not a Sharia expert, but this is what my betters have told me from the Marhaba team, that anything that is uncertain will likely not be Sharia compliant, and that includes generative art. So basically, people that follow that Islamic faith cannot participate in generative art or NFT projects along those lines. So basically what Marhaba is doing is becoming the gatekeeper and saying, look, we will screen these people and ensure that whatever you buy is Sharia compliant. So you can buy without having the worry of actually trying to assess yourself, or you don't need to go to a scholar and say, can I buy this? You don't need to use your Sharia scholars as a financial advisor, basically. So in terms of legalities, everything is quite similar on that point. It's more so on the Sharia compliance and ensuring that everything is, I guess, in accordance to that particular mandate. However, it's very important to know that it's not this platform itself, it's not specifically for people of the Islamic faith. It's for everyone. All it does, what it's trying to do is also include people of the Islamic faith. So in a normal product, we might have the whole world minus the Islamic faith. However, what Marhaba does is have the whole world, including the Islamic faith. So it's quite interesting, and I think it's a very inclusive product in itself.
Interesting. Well, there is one more additional question, sort of driven by the curiosity, because Marhaba DeFi, by definition, is powered by Sharia compliance, and company is incorporated in Australia. How does Sharia legislation integrate or interact with the Australian regulation, if I may ask that way?
Yeah, well, 100%. Look, I've drafted a few contracts, and there's been quite a few amendments. It's been able to fit in. There is some things that I've needed to completely restructure because of the Sharia compliance aspect, but there hasn't been too many problems in terms of that. But I can say that normally drafting a contract, whether you're in Australia or whether you're in any other jurisdiction, will be very different or somewhat different when you need to take into Sharia considerations, because you cannot. So for example, if I need to draft a loan agreement, I can't generate, the other party can't generate any interest or anything along those lines. They need to know when. There can't be any uncertainty. So I can't use any broad terms. My terms have to be very specific and straight to the point, which in a way is very good. And I guess a good contract is very specific. But sometimes when I want to keep it broad, I can't really do that. So it can be challenging for me at times. Yeah, but still, it's still good.
Well, again, Marhaba is the first project that I have seen being incorporated in Australia. Most of the projects, as you know, they choose Singapore or Dubai or island countries. When anyone is interested in incorporating, when they want to start a DeFi project or any kind of marketplace, in your opinion, what are the things that people have to look at? Is there sort of fact checklist or things that they have to tick saying this is the good place to start a company? How does that work? How would you sort of advise our audience on that?
Look, when you're picking a jurisdiction to set up your DeFi project or cryptocurrency project in, the first thing you should look at is basically how friendly is the jurisdiction towards doing that. And in my opinion, Australia is extremely friendly because what we use is existing legislation, and the Australian existing legislation generally fits most things in the cryptocurrency space under the legislation already. So it's very friendly, and we have a very strong infrastructure already. However, the second thing you need to have a look at is taxation. And Australia is quite heavy on taxation. So you're looking at 26% corporate tax, which is quite high in comparison to most jurisdictions. And that's why you see a lot of people actually setting up in Singapore or Dubai, BVI, some of the weird little countries, as the smaller countries in the Caribbean, etc. and whatnot. But what the advantage Australia has is, if you set up in Australia, people trust you. They know that you are bound by the law, and basically everything is generally above board. Whereas if you set up in a country like the BVI where there's zero tax, they're a tax haven. But as an investor, you're just not sure, is this company going to do a rug pull? Are they going to run away? I don't know, because in terms of legislation and pinning people down, BVI is still a little bit uneasy. So those are the considerations that you should take when setting up.
Well, that's kind of interesting first fact check in terms of the Australian benefits and the getting credibility of potential investors. Well, what are the other things that you could recommend whenever anybody is interested in starting any kind of DeFi project? What are the things that you could advise on, sort of must-do kind of things? So first one is about the selection of the jurisdiction. So you give one example of the tax haven-free region, and then you give an example of Australia, despite its corporate 28% tax, but it gets the credibility. In this case, Marhaba has decided to get incorporated, and obviously you were one of the commanders in helping to set up. What are the other things that you would recommend for DeFi startups to consider before they actually start legally getting into the space?
Look, a big one is token economics. Token economics does play a small part on the legal side, but it plays a big part on the economic side. What I recommend is you actually, or as a project, you actually really consider the benefits and the consequences of the tokenomic structure, because this will affect everything else later down the line. So yes, you have one jurisdiction, then you look at your tokenomics, but next is trying to capital raise. And if you do not have a good tokenomic structure, it's going to be very difficult for you to capital raise. So going out to VCs, ensuring that they will invest in your project or invest in your token. You need to also consider whether your token or releasing your token is legally compliant, because in a lot of situations, in a lot of jurisdictions, prior to actually releasing your token or selling your token to anyone, you need to have your platform up. Otherwise, it becomes a managed scheme or a unit trust in a lot of jurisdictions. So basically, it becomes a security if you don't have your platform up prior to selling your tokens. So that's a big consideration when setting up your cryptocurrency or DeFi project. So have your platform up before you raise capital. There are ways around it, but that's probably something we probably talk in another, have a chat about in another conversation.
That's fantastic. Well, if I could go back to specifics about tokenomic structure, how does the good tokenomic structure differ from the bad one? How do we know that? Because it's all about numbers.
Look, so what to know between a good tokenomic structure and a bad tokenomic structure, you need to be able to assess the impact of the public sale. So a bad tokenomic structure will not consider the impact at the public sale. So if your tokenomic structure goes below, or there's a good chance, there's a high risk that it will go below the public sale price, you have a bad tokenomic structure. You need to ensure that your tokenomic structure remains above your public sale price at all times if possible. And you need to do whatever you can to ensure that. And whether that's releasing tokens at a slower rate via a vesting schedule, or whether that's creating announcements surrounding big releases, big vesting schedule releases. Another thing is token price. Public perception is a big thing. So for example, you need to take into consideration, are people more likely to invest in a token that's worth $1, or are they more likely to invest in a token that's 1 cent? So a lot of these psychological considerations are actually very valid in this space. Very, very valid. I know for a fact that people will prefer the 1 cent token over the $1 token. The market cap might be exactly the same, but the 1 cent token will still be bought up because people feel more powerful if they have more tokens. So they would much rather have 50,000 tokens as opposed to 5,000 tokens.
Okay. And as a concluding question, and then I let you to give us sort of ideas for next generation entrepreneurs that are extremely crypto friendly or interested in starting their projects. Where do you think the entire DeFi industry is going? Because it reminds me .com era, when every single day you would see a new startup popping up, going to invest and raising capital. And then the next 5 to 10 years, they were wiped out because of the bubble. Do you think personally, that's the sort of in-core that we're going to have? Or there would be sort of evolution that we might not be aware of, given the fact that more people are connected online? 60 to 70% of the globe has an access to the mobile phone, and rising of Africa, the power that India brings on the table, obviously China's rising dominance. So there are so many complexities. So in your opinion, the DeFi, the NFTs, the blockchain overall adoption, which way it's heading?
Look, I think this is all going to get stronger and stronger. I don't see a crash. So like you said before, Amir, your example of Africa and other third world countries, a lot of those people don't have access to banking. They have savings, but they have nowhere to generate an interest rate. So now all you need is a phone. All you need is a phone, and you can put your savings in your phone or in your wallet, and basically you can start generating interest. You don't need a bank's approval. You don't need people telling you what to do. If you want to take out a loan, you can do so. So look, the biggest adoption of cryptocurrency is in third world countries. And you see large countries, or smaller countries, sorry, adopting Bitcoin as a legal tender. So I can't see this getting any smaller. I can't see it crashing at all. Decentralized finance basically is a big part of cryptocurrency. It needs to be there because people want to earn interest on their savings, right? It's same as a bank. People don't just want to leave it in the bank. They want to do something with that money. And this is what decentralized finance allows you to do, or allows them to do. So decentralized finance is not going away anytime soon, and there'll be huge competition as to who can safely, and I like to emphasize safely, provide great interest rates, return on investment, etc. So look, this space is only getting bigger and bigger, and if you don't study up or get into this space, or you're just going to be left out basically. I can't see it not being adopted into every business in the world.
Technically, your response just points towards the huge debate that one could have endlessly in terms of the concept of the money, where it's all going, what's the future of finance, and the competition between the CFI and DeFi, and why it's all happening. So the value of money as we know it today, and the shift in the paradigm of thinking, how interesting it's going to be. Well, what would be your concluding the pieces of advice or tips for those entrepreneurs who are building sort of DeFi products or protocols, or not only in DeFi or blockchain, but sort of entrepreneurs who are tech friendly? What kind of advice would you give them, be it from the legal standpoint or based on your work with other clientele that you have had and the ones that you're having?
Yep. So legally, don't be anonymous. Anonymous is something that can really hurt you. And it's very difficult to trust people that are anonymous. If you're not comfortable with the project, release a pilot. If you're comfortable with the project and you think it's going to succeed, put your face on it. There's no harm. Because people want to know, especially in this space, if you want to attract retail investors, if you want to attract the masses, they want to know there's someone behind it. They want to see a face, etc. I've seen a lot of anonymous projects and they've failed due to being anonymous. So I don't see any reason behind that. And me personally, I feel much more comfortable when there's a team that is not anonymous. For going forward, definitely get legal advice. That's one of the biggest, I don't want to sell myself, but legal is huge. If you don't have legal, and I've read hundreds of SAFT agreements, and they're not good at all. It can really kill you later down the track. These things might not matter now, and you might be on a budget now, but you can become a billionaire, right? But all that money will be taken away just because you haven't drafted your agreement properly. You haven't spent a few $1,000s to have your legals there. Even jurisdiction setup, taxation, definitely get taxation advice, because that is a big one that can hammer you. If you don't consider your taxation, you can end up in debt. And I've seen a lot of people in 2017 actually get really hammered. So for example, they took payment in Ethereum. They made 100,000 in Ethereum. They didn't cash out because they thought it was going to keep going up. Obviously, Ethereum tanked, and their 100,000 was only worth about 20,000 or 10,000, but they still needed to pay their tax on 100,000. So their 100,000 is $26,000 worth of tax, right? So now they're actually losing $16,000. They lost $16,000. Their whole year's gone. So taxation advice, I can't stress that enough. Legal advice, taxation advice, proper structuring, and then proper tokenomics as well, because then obviously that will crash. If your tokenomics crash, your project's not going to take off.
Well, Harley, thank you so much for this insightful, engaging, unbelievably educational conversation. This is our very first time, and definitely we will getting back to and having you for other sessions where you could educate our users, our fans and followers to learn more about the legalities. Thank you so much one more time for being the guest at Synopsis 2021. And we'll look forward to seeing you again next time.
Thank you, Mia. I really appreciate it. Thank you for having me on. And yeah, looking to have lots more fun conversations with you later down the track.